Ever stared at your overflowing wallet, a mix of debit cards from different banks, and wondered, isn't there a simpler way to see all my money in one place? You're not alone. In today's world of multiple financial institutions, keeping track of your funds can feel like a high-stakes game of hide-and-seek. Maybe you opened one account for a specific savings goal, another for your daily expenses, and perhaps a third with better interest rates. While diversifying your finances can be a smart move, the juggling act of logging into multiple platforms, remembering different passwords, and manually tracking balances can quickly become tedious and time-consuming. The frustration is real. Imagine trying to get a clear snapshot of your overall financial health. You have to mentally piece together information scattered across different apps and websites. This fragmented view can make budgeting a nightmare, saving a challenge, and even identifying potential financial issues difficult before they escalate. You might miss out on opportunities to optimize your spending or investments simply because you don't have a complete picture of your financial landscape. So, the burning question remains, can you actually link multiple bank accounts together? The short answer is, yes, absolutely. But like most things in the financial world, the how and where come with some nuances and depend on the specific tools and services you utilize. Let's dive into the various ways you can achieve this financial consolidation and the benefits it can bring to your financial management. One of the most common and increasingly popular methods is through personal finance apps and budgeting tools. Platforms like Mint, NAB, You Need a Budget, Personal Capital, and many others are designed to connect with your various financial accounts, checking, savings, credit cards, investment accounts, even loans, to provide a unified view of your financial situation. Here's how it typically works. You create an account with the personal finance app and then securely link your bank accounts by providing your login credentials for each institution. These apps use secure protocols and often read-only access to gather transaction data and balances. They then aggregate this information into a single dashboard, allowing you to see all your accounts in one place, track your spending habits, categorize transactions, set budgets, monitor your net worth, and even receive personalized financial insights. The beauty of these apps lies in their ability to automate the process of tracking your finances. No more manually entering transactions into a spreadsheet or flipping between multiple bank websites. The data is automatically updated, giving you a real-time overview of your financial standing. This can be incredibly empowering for gaining control over your money and making informed financial decisions. Another avenue for linking accounts, albeit with a slightly different purpose, is through payment platforms and money transfer services. Services like PayPal, Venmo, Zelle, and Cash App allow you to link your bank accounts and debit cards to facilitate easy money transfers to friends, family, or businesses. While their primary function isn't necessarily to provide a holistic view of your finances, they do act as a central hub for moving money between your linked accounts and other individuals. Furthermore, some individual banks and financial institutions are starting to offer features that allow you to view external accounts within their own online banking platforms. This is often referred to as external account aggregation. While the functionality might vary from bank to bank, it essentially allows you to link accounts you hold at other institutions and see their balances and sometimes even transaction history within your primary bank's interface. This can be particularly convenient if you primarily bank with one institution but have other accounts for specific purposes. Finally, the concept of open banking is gaining traction globally and has the potential to revolutionize how we interact with our financial data. Open banking frameworks, like PSD2 in Europe, empower consumers to grant third-party providers secure access to their financial information held by banks. This paves the way for innovative apps and services that can offer even more sophisticated ways to manage and analyze your linked accounts. While open banking is still evolving in many regions, it signals a future where seamless integration of financial data across different institutions becomes the norm. Now that we've explored the how, let's delve into the benefits of linking your multiple bank accounts. 1. Enhanced financial visibility. The most significant advantage is having a complete and unified view of your financial landscape. Instead of scattered pieces, you see the whole puzzle, making it easier to understand your overall financial health. 2. Simplified budgeting. With all your income and expenses aggregated in one place, creating and tracking a budget becomes significantly simpler and more effective. You can easily see where your money is going and identify areas where you can save. 3. Streamlined tracking. No more logging into multiple websites or apps to check balances and transactions. Everything is conveniently accessible in a single interface, saving you time and effort. 4. Improved financial planning. Having a clear overview of your assets and liabilities makes it easier to set and achieve your financial goals, whether it's saving for a down payment, paying off debt, or investing for retirement. 5. Early detection of issues. By monitoring all your accounts in one place, you can quickly identify any unusual transactions, errors, or potential fraudulent activity. 6. Better investment management. For those with investment accounts across different platforms, linking them provides a consolidated view of your portfolio performance and asset allocation. 7. Informed decision-making. With a comprehensive understanding of your financial situation, you can make more informed decisions about spending, saving, and investing. 8. Convenience and efficiency. Ultimately, linking your accounts streamlines your financial management, making it more convenient and efficient. However, it's also crucial to be aware of the potential considerations and security aspects when linking your bank accounts to third-party apps. 1. Security and privacy. Ensure that the apps and services you use employ robust security measures, such as encryption and multi-factor authentication, to protect your sensitive financial information. 1. Research their privacy policies to understand how your data is handled. 1. CEOTruckerGroup.com. CEOTruckerGroup.com. 2. Data access. Understand the level of access you are granting to the third-party app. Most reputable apps use read-only access, meaning they can view your data but cannot make transactions on your behalf. 3. Phishing and scams. Be cautious of phishing attempts that may try to trick you into providing your bank login credentials to fraudulent websites or apps. Always download apps from official app stores and verify the legitimacy of any service before linking your accounts. 4. Terms and conditions. Carefully review the terms and conditions of the apps and services you use to understand their policies on data usage, security, and liability. With that said, thanks for watching, and until next time.